Welcome back. We're in conversation with Rakesh Jhunjhunwala. Rakesh, I referred to it earlier, but in a conference which I attended, you called for Nifty in the six-figure range, over 1 lakh. Currently, it's 9,000. What makes you so bullish on this country?
See, Ramesh, where there is return on equity, then earnings growth is a function of nominal GDP growth. Right? Suppose I keep on increasing the earnings by injecting capital and there is no return on equity, then earnings growth means nothing. Only when there is ROE, then economic growth has to lead to earnings growth, right? Accompanied with ROE. Then only will the markets value it. China's economy expanded, but market didn't expand because the ROE doesn't just go up.
Right? Because actually the debt went up.
The debt went up. So the debt went up. So the question is that there is ROE in India, you're in a competitive situation. Now, if you look at what brings growth, what is India? India is chaos. It's not order. But growth comes from chaos, not from order. Right? India has skills. India has demographics. India has a democracy. India has a culture which is mild, which is suited to the modern world. Right? Now, now India has size. India has a GDP, whose composition is very good. There is scope to reduce consumption and increase investment. Today, China is trying to reduce investment and increase consumption. Right? So, we have well-regulated markets. So, why will that growth not come? See, after all, I just said, you asked me about myself, it's a chemistry. I think India's chemistry is absolutely suited for economic growth. And everything in India is bottoms up, nothing is tops down. Right? So I see the inevitability of Indian growth as inevitable, irreversible, right? And there's a difference between opinion and empirical fact. The fact is that India has raised its level of GDP growth in every decade since independence.
It has.
Right? Even in the worst years of socialism. So I see no reason why economic growth will not take place. I see we are a country of savers. In a few years, we'll be saving $1 trillion. We have well-regulated capital markets. We have set up the institutions by which money will flow into markets. Why will money not come?
And add to it the governance which is top-down.
Top-down. And also, that after all, valuations are slave of earnings. So I am extremely, extremely bullish, and I'm very happy and proud that in August of 2013 in an interview, I think CNB asked me that, we are at the bottom and things were, UP was at 68,
very bad
68, 69. I said the mother of all bull markets is still ahead. In December 2013, I said the bull market has started. And I think we have had one leg, we consolidate, but it's going to start again.
Sure. Are there, we've had through this last 1.5 years, multiple low-hanging fruit. And a lot of them seem to have been sort of removed, plucked away, and investors have come in. So, in this bottoms-up kind of approach that you have, is there some area that you feel is either unexplored? I know people talked about logistics, but those few stocks and they kind of went out of the radar very, very, very quickly. Are there some areas still which investors can look at and say, with patience, we can make a lot of money?
Jakes, my investment is more company-specific rather than sector-specific.
Okay.
Right? So I think there are still a lot of investable companies in India. I still find valuation in some companies extremely attractive. And see, there what happens, you have to be ready to face periods of underperformance. I buy a stock, I and Ramesh bought public sector stocks in 1999, 98. We underperformed the market vastly. Himachal went up 40 times. Shipping corporation went from 16 to 26, I was a king. But eventually Himachal came back to 100. And shipping corporation went to 200. So if you have the conviction and you're ready to face periods of underperformance, I think there's a lot of opportunity in the markets.
Do you think this could be led by, for instance, the public sector spaces, the big mega public sector corporations, which with governance and some transparency, I think could be a new period of...
but I have one or two... First of all, government is the first corporate governance.
Sure.
Typically, government companies should not be used as means of social welfare.
Right.
After all, they're capitalist companies. They're for profit.
Right.
Second is, the owner has no value for his equity. He doesn't mind diluting. He may constantly dilute. He has no plan for his disinvestment. And of course, they are large corporations, but a lot of them also commodity companies. So I won't by rule say that no public sector company is good, but I will not say that necessarily I will buy public sector companies. I will have to examine case to case.
What are the next 2-3 drivers after this point of consolidation that you're talking about? Are the cyclicals going to lead? Are the defenses going to lead? Where would you think the market would get the next leg up?
It has to be in the cyclicals. See now, in fact, for the banks, let us say. Now banks are not much fancied, and if things turn around, even at these levels, very, a lot of the public sector banks are very attractively valued. But the question is, now when are the NPAs going to peak out? Current quarter, next quarter, the second quarter next year, right? So unless and until now we see results on the ground, markets may go, but I will not find justice to buy. Now I want to see the actual results before I commit my money in some of the cyclicals.
If there's one attack that the government has kind of committed itself to, it is the attack on crony capitalism, led by RBI, led by the government. I mean, they are sort of hell-bent on sort of removing it, if you will, or reducing it. Do you think that could be the trigger for NPAs to come down?
That ironically may create some NPAs in the short run.
Yeah, but
Jakes, it's not about the NPAs. It's about us as a society. We had this scam. Coal. Now every mineral is going to be fairly
auctioned. Sure.
See, as a society, you will not breed corruption, right? So see, these are the incremental benefits. I am and I was very bullish on this government, and I feel, but I will come to one realization now. See, this change has to be slow, incremental. It will come together and it will burst into a very big growth agenda, right? But nothing dramatic is going to happen. So the dramatism of the market will have to realize this.
Incrementalism
is going to prevail. Dramatism is not going to prevail.
Right.
But whatever they are doing, easing of investment, facilitation of bureaucracy, auction of natural fixed assets,
spectrum,
ease of doing business, having a bankruptcy law, applying SARFAESI, right? And Jakes, there is one greatness about democratic society, that once a democracy wants something, no political leader in the world can disregard it. If the Indian people feel that banks are not functioning properly and the NPAs are just being given without any reason, things will have to change. I don't think that after this problem, Indian banking system will ever have this kind of problem for NPAs. So the change is coming. The tremendous. I still remain very bullish. Only I think it will be slower than what we anticipate, and we have to realize that.
It's a marathon.
And look at the wagon stocks. Boss, I would like to wait for these prices. I would like to wait for the orders and see the profits. It's not a joke. And also the market is facing a temporary mismatch between supply and liquidity. But the promoters are coming and selling. Honda took 3,000 crores, Bharti took 3,000 crores. I think today Volvo has announced they are selling 8.4% in. The equity will come from Timbuktu.
Sure.
It will come.
Is there a point for worry that some of these promoters of well-run companies are diversifying into other businesses, or is that?
No, I think nothing wrong with it. They are doing it in a transparent manner.
Which is?
So let us suppose the Honda brothers are two. Now the father wants to have separate business for each other. He's doing it transparently. He's selling some. See, if he puts that 3,000 crores in a bank account, that would be worrisome. If he's going to invest in it, what's wrong with it?
So there's enterprise of some kind.
Yeah. Typically, this bull market can correct how much, Rakesh, before you would be scared?
Ramesh, I feel a bull market like we had in 90, that the Dow never lost more than 10% of its value. So if this, let us suppose the Nifty goes to 9,500, it's at 9,000 today. Anything below 8,000 will be worrisome. But anything above 8,000, and even below 8,000, Ramesh, I don't know, maybe my head is, I am not bearish. Mark this, then India is going to, and for the sheer reason, I was telling Pranav, send me a WhatsApp today, that I told him one day that Pranav, we will tell people not to buy shares, and they won't listen to us.
And they will laugh at us.
They laugh at us. Right, so.
That point has come already?
That point may not have come, but I think if I was an investor, I would definitely wait.
But we are flirting with that point.
But that goes against theory, Rakesh, that you don't time the market, buy in a bull market, you buy.
I'm fully invested. I have
not you, generally, I'm talking about an audience. You are, of course, the smartest money here, but for a general audience, someone who's not come into equities, been in real estate, been in gold, should he come in now or should he wait for the proverbial 5% correction?
That is for him to decide.
He has to make the transition, right? Because if he's been in unproductive, what are seen as unproductive assets, gold, real estate.
But see, there what makes me a little uncomfortable is the kind of prices people, private banks, there is no limit. I mean, I'll buy 6 times book, 7 times book, it's what the hell here?
But Rakesh, you've advocated for mutual funds, money coming into mutual funds all these years. It is finally happening. The gush is becoming a torrent. Today, there's record inflows month on month into mutual funds. Ultimately, they will be buying it. They'll be buyers at new prices, right? So, the great Indian public is participating.
But Jakes, that doesn't mean that, I mean, I for one, maybe I'm wrong. The market says, today's market shows that I'm wrong. But I get this feeling that I would be patient. I mean, I won't go and buy. It's not that I won't buy. But I won't go and buy anything and everything.
Sure.
And 5,200 to 9,000 is not a small rise by any means.
Rakesh, you keep an eye on global markets, I know. Do you have a sense of the FTSE or the Dow, how they're behaving right now?
Well, I think one of the biggest, first of all, the economies may not be doing so well, but the corporates are not doing badly. Right? And for America, 40-50% of the sales is outside America. Second thing I feel is it's a product of the low interest rates. And I for no feel that the interest rates are not going to go up in a hurry. Right? And I really don't have any idea of I was surprised today. I thought China would have should have gone much higher after the interest rate cut, but it didn't. So maybe it was leaked or people already knew about it.
Maybe things have been moving ahead of themselves. But on a related point, especially for India, we haven't talked about oil at all, which has been one of the biggest tailwinds for us. Do you think that period continues?
I don't know. I only know one thing. That the price of $80 oil and 90 for diesel and 80 to 83 for diesel and $90 for petrol, you will have the same, $82 for petrol and $90, one of the two, you will have the same price as you had $110. Because of the 8 rupees excise which government has taken. But I don't think oil prices are really going to go up anywhere beyond 65, 66. Although some chartist friends of mine are
betting otherwise.
This year the chart is very good, but when chartists have a consensus,
it's also time to be.
Well, there's one consensus. We have to take a break. We'll take a break, come back and chat some more with Rakesh Jhunjhunwala.